You take too many trades, you hesitate, or you jump in late and the market punishes you. Today I'm going to show you not only how to choose the best trades, but how to ignore everything else. This might change your trading forever. Welcome to the show, ladies and gentlemen, fellow traders. It's good to have you here. For those of you who have not been on the show before, for those of you who don't know me, I'm Rob. And it's Trading with Rob, and it's Coffee with Rob, and hopefully you will recognize me, those of you who have been here before. Good to have you on board if you haven't been here before. Let's see who's here. Make a note in the chat, excuse me. Bit of a cough there. And then we'll talk about, today we're going to talk about pretty much how to choose your trades, the best way to go about choosing your trades, watch lists, all those nasty little things that we worry about on a regular basis. Don't forget, ladies and gentlemen, trading is risky. If you don't like losing money and you don't like risk, you probably shouldn't be trading. Obviously, that's one of the big issues in trading. Let me look for the charts here and let's get on board and let's talk about that. Because the first thing we're going to talk about today is what makes a trade worth taking. We'll get to that in a moment, though. We'll let everybody get on board. We'll let everybody get here. We'll let everybody join the show. And then we can kind of take it from there. And we'll see how we are. US dollar, Canadian dollar is going up, it looks like, as I said this morning. For those of you that are members, on the members side, you get a video every day about trade of the day. And this morning we discussed the US dollar, Canadian dollar going to the upside. And it does look like it now wants to break through that trend resistance and head on to the upside. Hello, Blue Mango. Hello, Payless. Hello, Elaine. Hello, Hate Diet Pepsi. And Jabba. Good to see you guys all again. Lovely to have you on the show. I don't choose trades. Trades choose me. That's a good way to look at it, actually. That's actually the perfect way to actually look at the whole scenario. I've got to say, from my side as well, I do believe in that. I think that's important because one of the most important things is to wait for the trade to come to you. So I'm actually going to get on with it. I'm going to talk about it. There are a few people here. Those of you who come in late can obviously go back and have another look at the video because you know what? The video is always there. I don't take them down. I don't remove them. So if you go to the channel, Rob's Logical Trading, and you go into the live section, you'll see every single live video that we've made for quite a while now. I think we've made 125, 126 videos. So we've done quite a lot of live shows. And, you know, if you want to rewatch any of them, you can go all the way back and watch all of them. And only in the last about 10 or so have I been actually doing more and more and more concentration on the actual training rather than everything else. I'm not here to take trades and show you trades and show you I made 150,000 or lost 70,000, whatever. I'm here to give you some insight into the market, show you all the mistakes that I've made, and perhaps you'll try not to make those mistakes, but you probably will. You'll make those mistakes because everybody does. No matter how much you're told not to make the mistakes, guess what? You're going to make the mistakes. It is just one of those things. There's nothing we can do to change that, unfortunately. I made all the mistakes even after they told me not to. It is what it is. So if you're serious about leveling up your trading, then this is probably the show for you. Then this is probably the video for you. This is probably where you need to be. But if you want to see people taking trades and jumping around on the charts and doing all kinds of fancy things like that, then perhaps not. Then maybe this is not the place for you. Because I rather tell it how it is, and I don't tell you that you're going to make millions in a day, because you're not. So, shall we get on with it? Good morning from Monica. Good to see you, Rob. Thanks for all the info. Teach me, my friend. It's Billy again. Hey, how's it, Billy? Good to see you, man. Right, so let's get on with it and let's talk about it. And the first thing I'm going to talk about is what makes a trade worth taking. What makes a trade worth it? Now, I've told you guys 1,000,000 times, maybe 2,000,000 times, that charts don't make you money. Charts are not what make you the profit. Win rates don't make you money. There's no money in a chart. All a chart does for you is gives you the ability to take and manage a trade. That's all it does for you. Gives you that ability to take a trade. Now, what happens to the human being is we get frozen in taking the trade. We can't manage to take the trade. This is where the problem comes in. Most traders don't fail because of bad strategies. They fail because they choose the wrong trades. And you hesitate. You jump in too late, as I said in the beginning. And this is where the problem comes in, when you hesitate or you jump in too late. So you need to get that scenario on the charts of picking the trade at the right time. Now, it's kind of a double-edged sword, because when I say to you, you don't need the charts to make money, or the charts don't make your money, I don't mean that you don't need the charts, because the charts help you take and manage that trade, and they are what allow you or give you the ability to get into the market. Now, there's a big thing and a big issue here, and that is when to take the trade. And that fear, that focus, that am I going to win or not? Now, you could take all of these lines off of this chart, every single line, remove every single line off of all of these charts. You can take every single line off of all these charts, and it won't make any difference whatsoever as to how you take the trade. You can just go, I want to buy or I want to sell based on a gut feel, and manage the trade, and you'll be okay if you follow the strategy. But the basis of it is you need to be able to take a trade, and you won't take any trades if you've got too much stuff on the chart, or if you don't have anything at all on the chart. You just won't have the ability or the confidence to actually take a trade based on anything. If you have too much on the chart, you start to stop yourself from taking the trades. What we have here, we have the resistance, we have the support. Now, the easy way to do it, now there's a lot of information in the market as to, for example, a moving average crossover, and they say, no, when it crosses, you take the trade. Or with price action, the green candle comes out, when it comes back to retest, you take the trade. Or there's all kinds of rules and regulations. And the rules and regulations, what do? They boggle your mind. You don't really want the rules and regulations to boggle your mind, because all it does is it confuses the issue completely. So the best thing you can do is, when's the best time to take a trade? Is when a trade is available. But if you've got resistance and here you've got the support, so those of guys that have watched my videos, you know what support and resistance is, you know what supply and demand is, you know what the trends are, you know that we trade three ways, you know that we trade with the trend, we trade in a range, and we counter trade. Okay, so you know we trade the three ways, you know that. Now, when to take a trade, I mean, would you take a trade when it's in between these two? In all likelihood, probably not. So what you're looking for is something to give you some kind of confirmation when you're taking the trade. So like, it comes off this resistance, gives you that big red candle there, that tells you it's going short, so you take the short, and bully for you, it goes down to the support. When do you take the trade again? When it gets down to that support level, because you know there's lots of money there, you start looking for a new trade. And then it gives you the green candle coming to the upside, it confirms, it closes, says I'm green, and then you go for it. Now, I don't wait for the retest. You can if you want to. The retest is it comes back, it touches the line again, and then it goes up. But it doesn't always retest. So when should you take the trade? You should take the trade when it's available to you, when it's there. When you see the green candle, go for it, put the stop loss in place. You're going to lose 50% of your trades. And then with that, just manage the trade as far as you possibly can. In most cases, you can put your stop loss in a very safe area, and you can just wait for the trade to play out. But what should you ignore completely? What should you ignore? What should you leave alone? And the best thing I can say to you is when it starts giving you little dots and little movements like this. For example, gold is short now because it's broken structure, it's broken to the downside, it's come off the resistance, it's very close to the resistance. Why am I picking this trade? Because it's seriously at the top, and I'm looking at it coming off of this area, taking that money and going down. I am already short on the silver, which is pretty similar to the gold. But what is really irritating is trading when you got tiny little dots like this and nothing's happening. It's sitting right on the resistance. It is in a bullish trend, so it is going up. In other words, you should be going long. This is the trade that I ignore. Why do I ignore this trade? Because it's too close to the resistance. There isn't much room to the upside. Not much room at all. It can go, or it can go to the moon. I mean, you know, but what I'm saying is that as we stand at the moment, there's not much room. It'll probably go to resistance and come down. If it breaks through that resistance, then there might be a trade. Then we don't ignore it. Then we start looking at the possibility of a good trade. But as it stands at the moment, I'm not interested in a long trade here. I'm only actually interested in a short trade as we stand. If we get a nice red candle pointing to the downside, closed, breaking the structure, then I'll look at a trade. But as it stands at the moment with these small little candles, tiny little candles, undecided candles, you see those little undecided candles there, nothing happening. There's not even a flag pattern developing here. And it's too close to resistance. It's too close to an area for a long trade. This is a trade that I'm going to ignore. Just an example. There are many examples of this. If you go to Bitcoin and you look at Bitcoin, I'm looking at Bitcoin and I'm saying, well, it's gone bullish, it's gone up, so has Ethereum, so has all of the other cryptos. I look at it and I say, well, it's gone up, but it's hit this resistance and it's giving me tiny little candles. It's milling around here. It's really doing nothing. This is the kind of trade that I am going to ignore. I'm going to ignore it completely because it hasn't broken to the upside and it isn't going down yet. If I get a strong red candle pushing to the downside, then I'll say it's going to probably in a range, probably going to go short again, back down to the lower level. If it breaks to the upside, I'll look at it. But while it's below that resistance, I'm not going to take the trade. The trade doesn't look good to me. This is really, really important. And then another really important issue that I find is that causes problems for traders is overtrading. You tend to overtrade. So in other words, you drop to the 5-minute charts because you're bored, you drop to the 1-minute charts because you're bored, and you start taking too many trades, or you just stay on the 4-hour charts and you just take too many trades, particularly on one project. For example, I've been married to US dollar ZAR for quite a long time. I've taken millions of trades on this and Brent crude oil, and I keep on taking the trades over and over again. And then you lose half of them and you win half of them, but you kind of take too many trades. So one of the reasons for overtrading I find is if you take a loss or you get stopped out, and then you immediately trying to get back into the trade as quickly as possible, and you just take the trades no matter what. You know, you've got to be very, very careful of getting caught up in overtrading. Overtrading is not a good idea in any way, shape, or form. Now, how can you trade with calm and confidence on a daily basis? And the way I do it, and this is where it comes in, the way I do it is I take trades on a swing trading basis, as you guys call it. A lot of people, I call it position trading, but it doesn't matter what it's called. Swing trading is very much a thing. In our day, it used to be you take it at the bottom and you take it at the top. So you buy it at the bottom, when it gets to the top, you sell it and you go down with it, and you would ride the trade up and down. That was swing trading. Now, position trading is you take a position in the market and you leave it. So the reason I call it position trading is because that's what you're doing. You take a position in the market and you leave it. But the best way to take your trades and to look for your trades, now you look, most of you will end up with a watch list like I've got here. There's like a million different things to look at. And, you know, it becomes really complicated when your watch list grows and grows and grows and becomes that big. So then you try and narrow it down and you try and make it smaller, or you try and separate it into Forex and crypto and indexes, or, you know, there's all manner of different ways of trying to narrow it down. But at the end of the day, you're looking for trades. So what I will do is generally either at the beginning of a day or at the beginning of a week is just have one chart open and just slide every single one over and just check if there's any pattern on there that looks reasonable. The ones that look reasonable, those ones I'll shift into a manner of these 12 or so shares. Maybe I'll have a few more depending on the day. I've got a whole number of different ways of putting watch lists together. But put those together and say, these are the ones that I'm seriously interested in because these are the trades that look like they're going to do something. And now it all becomes calm, because now what you're doing is you've chosen which trades you're looking at, and then you just need to keep them on the slower time frame. In other words, the 4 hour, the day, and pick your levels. So now you want to take Brent crude oil. Should I? It's in a bit of a bearish trend. There's this. But now what you do is you just simply wait for the trades to come to you. US dollar, Japanese yen. Oh, I forgot to mention to you guys earlier, I did take this trade, but okay. I should have actually put it on the Telegram channel. This trade was going short, and I mentioned from the very beginning, all the way up here when it was at the 157.9, 158 level, I mentioned to you that fundamentally, ear to the ground, the Japanese don't like it when the yen's over 150. They're going to try and push it down one way or another. It's coffee with Rob, so we'll have some coffee. 34 years of drinking coffee and trading. Can you believe it? Anyway. Actually, no, you know what? When I started trading 34 years ago, I used to drink tea. And I drank tea for many years. And then when I changed to coffee, I became more profitable. Just kidding. Anyway, promoting coffee there. But if I look at this Japanese yen, for example, this is just a good example when to take the trade. What I said was this is going to go down. But I never took the trade because there was no signal to take the trade. There was a signal further down here where it did break structure, but then this structure fell into price, which is very much a liquidity area, a demand area, an area of money on top of a strong support level, very strong support level here. So I made the conscious decision from my side that if it breaks through this level, I'm going to grab a short trade, because I mean, then it's broken through, it's broken to the downside, and it looks good. So today, it broke through that level. It broke through that level. Don't hesitate. Don't think about it. Don't overthink it. Don't put 25 different systems on the chart to try and stop yourself. It's happened. What you were expecting to happen patiently, what you patiently waited for, happened. So then you just take the trade. So trade's taken on whichever portfolio. Sorry. Trade is taken, and it is now moving down. And that's what you expect. You put the stop loss in place. If it does go the other way, then it's just going to simply hit the stop loss. And if it goes the right way, you're going to make money on the trade. What you have to learn to do, if you're not used to this, and if you are hesitating with your trades, or you are struggling to get in with the trades or get the trades in the right place, and the market is just punishing you all the time, is just learn to take the trade. You see, the thing is, if I was to just take these trades here, so there's what, 3, 6, 9, 12 trades here. If I was to take every single one of these trades and just go buy, sell, buy, sell, buy, sell, whichever way, okay, and manage them. We all know that there's a 50% chance you're going to win, 50% chance you're going to lose on each and every trade. It really doesn't matter. If you manage all 12 of these trades, you'll probably win at least 4 of them out of the 12, maybe 5. And if you make more profit on them, then you're going to be profitable at the end of the game. So that's what it's all about. That's as simple as it gets. This is it. This is the whole point. This is the whole thing. It's the rules when choosing your trades are just as simple as just take the trade. So keep it simple. Just take the trade. Don't try and overcomplicate it. Don't try and make it into something that's completely, how can I put it? You know, the moon must turn to green cheese and move 4 degrees to the left. And, you know, you're just going to not take the trades. Also, just keep your eyes open for fundamental information in the background that can affect your trading. Don't be taking trades just before the Fed speaks, for example, because you're going to get that wrong every single time. But what you're looking for is for trades to come to you. You just wait for the trades to come to you patiently. When the trade comes to you, take the trade. Don't hesitate. Don't mess around. Just do it. And then that will make your trading that much better, that much more profitable at the end of the day. Hope that helps. Guys, got any questions? You'd best ask them, because I'm here. I ain't going anywhere just yet. So best have a look and let's see what we've got. see how the trades go. But I just thought I'd cover that today. How do you choose your trades? And look, one of the best things is this watch list is just going through the watch list, just go through it. You know what I sometimes do? I sometimes put an RSI on the bottom and I just check if it's overbought or oversold. And if anything looks way out of whack, I'm definitely going to have a look at that chart. That's sort of a cheat code as well. Do I take every single chart and analyze it in depth and sort of put it on the day chart and take the levels, bring it down to the 4 hour, take it and go down into the 5 minute and take this? No, I don't go all that deep. No, that's crazy. All I do is very simply, I spot something and it looks, because most of these things have got the lines on already anyway, because you've been watching charts for the last 2 years. Just every time I spot something, then that chart goes into more in-depth look. And then you go into in-depth and you start checking that one out and see how that's going to work out for you. You'll miss a few trades, you obviously will, but you're looking for those ones that are close, that are going to come to you through the week, and you're going to be able to grab those trades. And then you just have to have the non-fear to just go and grab it, take the trade and go. That's what you need. That's the interesting bit. And then the hate diet Pepsi says, can't be calm unless you trust your strategy. You have to trust your strategy. But keep in mind, the charts are not your strategy. The charts are your system. So you need a system to take a trade. And the system is what gets you in there and makes you click the button. Once you've clicked the button, get this one thing. Clicking the button is the important part. You just got to get into the trade. Once you're into the trade, then the important part starts, and that is managing the trade. The strategy, the stop loss, that's the same on every single trade, the same percentage. So the same amount. So if it's $100,000, you're going to risk $1,000 on every single trade. How do you do that? You work out where your stop loss is going to be, then you work out the size of your trade back to the area, and then you know how big the trade's going to be. Then you just make sure you're going to make more on the win and lose less on the loss. Keep all the losses the same. If all the losses are the same or less, then you're not going to lose. The minute you start making your losses bigger than your wins, or just taking any old amount on every trade, you're not going to know where you stand when it comes to winning in the market. If every stop loss is different in amount, not in size, in amount. In other words, one stop loss is $1,000, another one's $200, another one's $100, another one's $2,000. The ones that you're going to lose are the ones that are big, and the ones that you're going to win on are the ones that are small. It's just Murphy's Law. It's just how it works. Keep your losses the same, then you can manage your account, and you can manage where you're going with it. You can know that you need to make more than $1,000 on every single trade. Then you can work with that. If you take a smaller stop loss out of that trade, that's fine. If you get out early, that's fine. If you see it going pear-shaped, that's fine. That's not a problem. What's a problem is if you make a conscious decision to have different sized trades on every trade. If you have different sized trades on every single trade, you're going to have a mishmash of whether you're making a profit or loss. You're going to be able to tell everybody you've got a win rate, but you're not going to be able to tell everybody you've got a win, because you're not going to have a win. You're going to have small winners, big winners, all kinds of mixed stuff, and you're not going to have a proper situation. You're always going to pick the wrong trades. You're always going to pick the wrong trades to make a profit on. You're always going to pick the wrong trades that you want to be the biggest trades. You're going to be super confident in taking a trade. You're going to say, that's the trade for me, and you're going to throw the kitchen sink at it, and that's the one that's going to lose. The one that you were scared of, that you just like penny pinched and said, I'm not really going to put a lot into that, that's the one you're going to win. It works like that. And then at the end of the day, you wonder why your account's not winning, and that's because of those sort of scenarios. You do have to be very careful of that scenario, because that is something that happens a lot in the markets. It's very, 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 very popular. So don't overtrade, and take your trades. It's so important. Just take your trades. When you see the trade, take it. Take it. You know, if too much messing around, too much waiting, too many indicators, too much stuff going on in the background is going to stop you from taking the trades, and then effectively you're just going to be frozen in fear, and you're just not going to make the dosh. Now, so many times I've taken a trade and then I've looked back and thought, oh, I missed that. Shouldn't have taken that trade. But now you're already in the trade. You're in the trade. So the best thing you can do is manage it. So what I'll do is if I spot something on afterwards and say, well, maybe I should have been more careful, then what I'll do is I'll say, well, I know that's there now. I know that's there now. So when I'm at a certain point, I'll have a relook at the whole picture and maybe I should, move on or whatever the case. But yeah, that happens to me quite often where I've taken the trade and then I look back and think, oh, why did I take that trade? But that's the way to do it. Because if you don't do that, you're just never going to take the trades. You're just going to be struggling along forever. Or you're just going to be, you get to a point where you start desperately taking trades and you start over trading. You start taking too many trades. That is also the exact same effect. It starts to mess around with your trading. Don't do that. Dum, 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 dum. The NASDAQ is one of the trades that I'm avoiding at the moment. Why am I avoiding it? The same reason as this DAX. Look here, the DAX is right on the resistance. It's sitting on the resistance. And if you, oh no, did I just close the DAX? Damn. That's terrible. I just see. I'll just put this on, it's fine. And then I'll just change it to the DAX. Dum 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 dum. Dum 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 dum. Dum 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 dum. I like that trading template better. And then we shall just make it the DAX. So I went and closed it. That's the only thing about MT5. It's a real pain sometimes. That's okay. It's back. NASDAQ, as I was saying, the NASDAQ is the same as the DAX. It's going up very close to the resistance level here. And it is in a bullish run. It is running along the trend support. But why am I ignoring the trade? Look at the size of the candles. They're tiny. These candles are tiny. Tiny little candles, okay? And there's an undecided candle. Tiny little candles that are just hanging around here, doing nothing. They're not interested in doing anything. They're just tiny little candles. So for me, what I see here is tiny little candles really close to resistance. This only time I become interested in this trade is when it breaks to the upside, breaks through that resistance level and gives me a green candle to the upside. Or it gives me a red candle to the downside and says we're going short now. Then I'll be interested in that scenario. But as it stands at the moment, no, not at all. Okay, right. I usually look at the charts and decide whether I'm going long or short on a particular market and wait for it to give me a favorable win to stop loss ratio. That has been, yeah, that's exactly what we're pointing out is, you're going to look at it and you're going to decide whether you're going long or short on it. And then you're going to wait for it to give you a favorable win or stop loss ratio. That's basically it. But keep your stop losses or your loss the same on every single trade, or your risk threshold the same. You can get out early and take less loss on a trade. You don't have to sit and wait for the whole loss to play out. That's entirely up to you. But don't have different size trades on every single trade on one account. You can have different size trades on different accounts, but on a specific account, keep all your trades the same size. That way you can manage the account into a win with a strategy. But if you have different size trades on every trade, you're never really going to come out at the end of the day. What you're expecting, because that becomes a psychological thing. Why do you think you do that? Why do you think You take bigger trades on some and smaller trades on other ones. It's because the ones you take the bigger trades on, your mentality is telling you that you're more confident on it and you believe that that one's going to win. The ones you take smaller trades on, you believe that that one's not going to win. You're scared of it. You don't want to touch it. If you're not confident in a trade, if you don't think it's a good trade, can I suggest that maybe you don't trade it, that you leave it alone, that you don't touch it? Because if you're not confident enough to take the full trade, then you're not confident in the trade. Then you don't believe in that trade. So you shouldn't be touching it. You should be ignoring it. If you're confident in the trade and you believe in the trade and you think it's a trade worth taking, trade the full amount. Don't be taking trades with smaller amounts, lesser amounts, different size trades because you're not confident in the trade. If you're not confident in the trade, then you're not confident in it. You shouldn't be taking it. And then don't be overconfident with some other trades and just like think, I can throw the kitchen sink at this one, because those are the ones that are going to throw it straight back at you with a few bricks as well. And they're going to pummel you because that's what they do. They suck you in and you think, I'm going into that one. That one looks brilliant. That's the trade for me. And then, oops, it doesn't work out. So, for example, this trade looked fantastic this morning. Looked at it, jump in, same size as all the other trades. You don't throw the kitchen sink at it. It could easily turn against you. It could easily change the picture just like that. And if you don't believe me, just take a look at trades like Bitcoin and how they jump around and how volatile they are. You never know which way that's going to go. So you're trading it short, all's going well, and poof, it goes the other way. Wow, oops, threw the kitchen sink at it. That cost a fortune. So yeah, I got to watch out for that. And then we've got the Euro US dollar question. Euro US dollar breaking to the upside. Doesn't look too bad. If you look at Euro US dollar, it's hit a top level, it's broken to the upside. There is another level further up here at the 117,285, somewhere around there. If I was going to take a trade on this, I'd take it long and go to the upside. Very bullish, nice breakout, looking good. Looks like it wants to go to the upside still. And I don't see anything wrong with staying long on that or taking a long trade if you haven't got it. Structures to the upside, it's all good. It's an upside trade. It's a bullish trade. Go for it. Yeah. So effectively, I don't want to be picking your trades for you. I'm here more to sort of help you along with, how and best way to trade and that sort of thing. I'm not here to take loads of trades and, click here and watch me trade and watch me make and lose money and that sort of thing. That's not what this channel's about. This is more about showing you the mistakes that we all make and showing you the mistakes that you're probably going to make and the best way forward for you, and helping you to understand that you can't take $1,000 and turn it into $2,000, or even $100,000 and turn it into $200,000. That just doesn't happen in the world. There isn't any way you can take your money and do that very easily. And the stock market's also not one of those places, right? You're going to put your money in the market. You've got to understand there's a 50% chance of losing. You've also got to understand that it's a long process. It's a long process of investment. It's a long process of growing your funds. You will make more than if you give it to a bank, if you do it right. But this is not a process where you're going to go and make 200% on your money overnight. That's not how it works. Even when you open a retail store, you believe you can make 200% on your money, but you can't. Because even if you do try and make 200% on your money, you still have to pay staff, you have to pay the rent, you have to keep the lights on. There's a whole bunch of things you've got to pay for that are going to eat into your profits and take your profits down to a much smaller level. You have to treat it like a business. This is not just, I'm going to get into trading and I'm just going to make money on every trade and I'm going to make a fortune because Joe Soap said I'm going to drive a Lamborghini. You're not. That's not how it works. Okay. Got a real question for you. Seriously, I'm one retired commercial driver, had cancer, can't drive any longer. So hoping this can make enough for me to be around more. What do you think? Or should I do the World Poker Tour? Billy, if you do the World Poker Tour, or if you do trading, it's a difficult one, man. 50-50 there. No, I'm just kidding. Of course, you don't want to do the World Poker Tour, unless you're really good at poker, of course. But you can think of it in very similar lines, though. You can make money from the stock market, from trading. Let me put my frog back. It's falling over. My little frog has to be in the right place. My lucky frog. Anyway, you can make money from trading, and you will make money from investing. The trouble with investing is time in the market. So time in the market refers to 30 years, 20 years, basically 30 years. 10 years is not going to make you a lot. If I do the calculations for you, and I do have a video somewhere back there, I just can't remember which one it is though, where I went into detail on investments, how much money you can make, and you'll fall flat on your back when you realize how it starts to snowball the more years go into it. And unfortunately for myself, it took me a long time in my 34-year career to realize that investment was the way to go. So I lost about maybe 10 years in the beginning of that without thinking, because I was in and out of the market, and I thought I could, take the stocks and sell them at the right time, and then they run off without you and all that sort of thing. And then there came a point when I realized that time in the market really does work. So you put everything in to investments, and what I do is I kind of, if I've got excess every month, add to those investments and leave it there forever. Gosh, my kids will be rich one day. But anyway, not me. So now here's the thing. That investment account grows, it makes you money, it pays you dividends, and it's really good. So if you have a rather large sum of money, it's not a bad place to put it. When it comes to the trading side, and the reason I trade is because I enjoy it, and because I'm addicted to it, and because I love it, and because maybe I love flashy things on the screen. I don't know, I'm always trading. And I used to think that trading was the bee's knees and the one thing that was going to make you a fortune, but it's actually not. What's going to make you a fortune is investment, if you have the time. Now, so you mentioned that you are 51, which leaves you with a bit of a problem. And you've also had a bit of a cancer problem, which you've overcome. So maybe you don't want to sit around and hope that you're going to get somewhere in 30 years. You want to get it now. Trading becomes the option, which is why I came across the system which gets rid of the time in the market scenario by using the strategy of make more on your wins, lose less on your losses. Forget about the charts. Charts are not the answer. The answer is to keep your losses the same, make more on your wins. And that's a bit like trading with time in the market. But what I normally would say to any one of my friends that come to me and discuss this with me is, don't take every cent that you've got in the world and throw it at trading. It's not going to be the magic pill that's going to make you a fortune that everybody's telling you it is. What it's going to do is it's going to give you a means to an end. And you do need a rather large amount of capital to make money in the market. This business of take $1,000, turn it into $100,000 sounds wonderful, sounds great. But where can you do that? Where can you even take $1,000 and turn it into $2,000 in 1 year? Really difficult, right? So you need a capital sum and that you can work with. Now, the problem that you have here is you need to have some in the investments and you need to have some in the trading. So I wouldn't take more than my overall capital wealth. I wouldn't take more than 20% of that and put it into the trading. And then on the trading, remember you leverage. So now you're trading with leverage trading. So you're trying to make money out of that leverage. So you're trying to take 100,000 and maybe you trade $1 million with it. Okay. So you're trying to make maybe 10 or 20% per year on the $1 million. So you're really trying to double your 100,000 into 200,000 by the end of the year. But if you're needing to spend on it, that becomes more difficult again. Also, the way I look at profit in the market is over time. So in over a year, I don't look at profit today, in a week, a month, a day. You rather look at what can I do over an annual basis? And then over that annual basis, do I make a profit? Do I make a loss? What I normally prefer to do is a tax year, February to February, because then you know it's in the tax year and you can declare loss or win in that tax year. It works best way. And then you've got, you're not under pressure every single month. And then you must have a nest egg for the year that you're living in. In other words, something to spend for that year. Now, this is not financial advice. I don't give financial advice. Nothing I say here constitutes financial advice. This is just from me to you, what I do, what you can do, okay? I don't give financial advice, but you can take with it whatever you like. But all I'm saying is don't expect to take a small amount of money and turn it into a huge amount of money and survive on it. That's not what you can expect. What you can expect if you become good at trading, and to become good at trading takes a couple of years, some a couple of years, some more. You don't learn trading in a week. This is just charting. Charting you can learn in a week, but the actual trading, fear, FOMO, actual making money, that sort of thing, takes a couple of years to get into it. And if you become good at it and you've got enough, then maybe you can start making 25, 45, 50% per annum on your money. And then you can work it, calculate it back according to that. So if you have $1 million and you're going to make 25% on it, you're going to make 250,000. Or if you're going to make 50% on it, you're going to make 500,000. Or can you double your money? I don't know. It depends how good you become at trading. But bearing in mind that you can have bad years, you can have loss years. Nobody tells you about the loss years. Nobody tells you about their bad times. Nobody tells you about that. And even if they do try and tell you about that, I've seen a few videos out there. I lost $70,000. And then you go and watch the video and they actually try and turn it around into like, I actually made $3 million or something. So no, it kind of like, no, they don't tell you about the losses ever. And some of those losses can be quite painful, quite gargantuan. You have to understand that you are going to lose in the market as well as win. And the only way to work around that is to keep your losses constant. In other words, the same amount of loss on every single trade with a view to trying to make more money on the profit so that you're somewhere down the line, you can come out with an overall profit on the structure. That's the issue. Everybody dollar cost averages at some stage in their career. Everybody follows a loss down at some stage in their career instead of getting out because they believe they can't lose. You know, one of the overall feelings that traders have is when they're in a loss, when they're sitting in a loss and they're losing in the market and it's going against them, is if I don't get out of this trade, then I haven't lost anything. That's the overarching feeling. And then they follow the loss down into the pits of hell, for whatever reason. And it gets worse and worse and worse and worse to the point where there's a threshold and the trader just can't take it anymore and they have to let go. And then it really hurts them because it goes back the way it should have gone in the first place and they feel even worse. And then they try and get back into the trade because it's going the right way. And the minute they get back into the trade, it carries on doing what it was doing and takes even more money off them. Many traders get caught up in that trap. And it's a terrible trap to be in. Terrible trap to be in. You don't want to be there. So, yeah, you really do have to be careful about how you take your trades and how you manage your trades. The stop loss is so important, and really, 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 you have to learn that strategy. If you learn the strategy, then you'll be okay. But yeah, can you actually survive off trading? Keep in mind that 75% of leverage traders lose. 25% win. And I know you think you're going to be part of the 25%. It takes a number of years of strife and pain to become part of that 25%. You know, you go through a lot of life lessons, you go through a lot of schooling. I call it paying taxes when you lose. You go through a lot of that before you get to the point of, or I actually clicked and I can actually make money on the markets. In some cases, overconfidence becomes a big issue because you win a few big ones, you get lucky. There's a lot of guys out there that have won a few big ones, got lucky. They start throwing everything at the market and then they lose everything. You have to be careful of that. So, yeah, should I do the World Poker Tour? Whew. Perhaps, I don't know. Yeah. Trading is a diver. Sorry, a diver. Yeah. A diver is actually an interesting job. Wow, that's actually quite interesting. I remember you mentioned you lived up north in Montana. Interesting place to be living if you're a diver. Yeah, trading is a steep learning curve. Elaine, good to see you. It's an excellent skill to learn. Really, thank you, everyone. It is an excellent skill to learn. What I would do in your situation maybe is I would trade. Definitely. Well, obviously, I mean, I've been doing this for 34 years and I believed in it wholeheartedly all along and I've made money out of it. So, you know, can't argue there. And obviously the investment side, really important. That's important. So if you are capable of having an investment side and trading and having something maybe on the side that you can do as well, just to tide you over, then you can get to a point where the trading's making you good money and the sideline's making you money. I've had many businesses in my trading career. It's not like I only traded. It looks like all Rob did was trade. No, I started trading 34 years ago. But in that time, I've owned retail stores, companies, businesses, and I've done a lot of different things. I've even had property companies and things like that. So lots of things that have tided me over through the times when, you know, when trading became hectic and difficult to maintain. But all that time, I kept on trading. It's just that now in my later years, I don't need to have businesses. I don't need all that stuff anymore. And so all I've got left effectively is my trading, and trading can be boring. So therefore, Rob thinks, what should I do besides play games? Oh yeah, let's have a YouTube channel. That's fun. And I love computers and that sort of stuff. Well, I've learned to love them, let's say. So I've become sort of into that sort of stuff. So now I keep myself busy doing YouTube videos with the trading. So it keeps me going. It keeps me busy. So I'm not bored. I'm not sitting around growing old. But you have to, it's actually a good idea to find something else to keep you busy as well. Just not only for the financial aspect of it, but also for the mental aspect of it. Because if you only trade, and there's been many times in my 34 years where I've only traded, where I've just sat and traded, nothing else to do. The last couple of years was a good example of that. And it becomes a very lonely place, even though you've got family around you and what have you. It becomes a very lonely place because nobody trades with you. Nobody in your family knows what you're doing. None of your friends really know what you're doing. So you're all on your own trading. So what I did in many a case when I was alone like that is have a WhatsApp group, find other people that trade, speak to them, that sort of thing. That helps you. It sort of maintains your mind. Because what you find when you have a business or another job or something else on the go, there's other people around and there's always someone to advise you or help you when you're going the wrong way or going astray or you just don't know the answer. Whereas with trading, very often that's not the case. You're all on your own and you just have to decide and figure it out. And there's no one to speak to, no one, you find yourself listening to the radio. So yeah, for the mental aspect of it as well, find something else just to keep you busy as well. It's not a bad thing. Just my thoughts you know. Okay. Boom, boom, boom. Okay, so yeah, so for Billy, it's kind of like 50-50, dude. You can do it or not. Yeah. If you are capable of finding something else to keep you busy at the same time, then you can do both. And then maybe all three, investing, trading, and that's something else. But I would definitely say don't take your let's say you have a package of money, finance, whatever. Okay, don't just leave it in a bank or let some financial advisor take it over for you and say, I'll give you 8% per year per annum or something like that. That's definitely not on. What I would do is then on a one-to-one basis, not leveraged, on a one-to-one basis, what I would do with it is I'd put it in an investment account of shares. Okay. And then I would buy, say, 10 American shares or some UK shares, or, if you're in South Africa, some South African ones, whatever. The US ones are probably better, but the top ones, the blue chip ones, the nice ones, the Nvidias, the Coca-Colas, the big ones, okay? And buy into those companies and just hold those. Choose, maybe at a later stage in your life, choose companies that pay dividends, because growth shares will take 30 years. Maybe choose some shares that'll pay you dividends on an annual basis, and then it'll grow. And you'll actually have a growth account of around, over years, of around 25% per annum rather than 8% per annum. Just a thought, that does work, by the way. Trading, on the other hand, is totally up to you. So that makes quite a big difference in how you handle the accounts and that sort of thing. Take profit on gold on the short, okay? Because I'm actually short on silver on one of the accounts, and the take profit on gold is at 4036, somewhere down there. You're looking at about 4,000. It's quite a far way down. First targets you're looking at are down here at 4.1, but 40.50 was my main target. I remember that now. 40.50 was my main target on the profit. 4050. What was my target on the silver? Let me just check that account. Just want to have a look on the silver. And on the silver, I have a target down at take profit 53. 53 on the silver. Just close that account. Just for those of you who wanted to know. And why did I take it short? Well, I took the silver short because it was way overbought. I just looked at the overbought situation and I literally took it at the top. But gold has got a pincer top. It's come down below the resistance. It's broken through this trend support and it's looking to the downside. And that's another reason I look at silver and say, well, if gold's falling, silver's falling too. So I took the silver early. And but sometimes I do things like that. And I don't follow the rules. And then I don't want to go into too much detail with it on you guys, because I've shown you the correct way to trade. And what I've done with silver is the complete incorrect way to trade. But sometimes gut feel is the way to go. You don't need anything on the chart. I just kind of looked at it. It's overbought, sell it and manage the trade. That's how you should be trading anyway. You should just be take the trade, manage the trade and see how it goes. That's basically where I am with it. And that's what happened there. But gold, yeah, I'd say 40.50 is probably your main target. Not 41.50, 40.50. 41.50 is a first target. It's like here, it's like right here in this level. If it breaks through this level, you're looking at 40.50 all the way down here, and maybe even the 4,000 level, a little bit lower if it drops that far. But yeah, your first target would be 41.25, 41.30, 41.50. But lower main target 40.50, a big target at the bottom here. If it breaks to the downside, it's going to break to the downside. It's going to break heavy. It's in a range anyway. So you see the range is quite here. The main range in the middle here. So if it stays in that range, then that's what you're looking at. Okay. So, yeah, Billy, stick around, like see how we go, and we'll try and help you the best way we can and make sure that you go in the right direction. That's important. It's important to understand one thing, and this is especially for Billy, but for all of you out there. It's really important to understand this. And I've seen all the videos. I haven't watched them all. I'd be lying if I tell you that. I've seen them all out there that say you're going to take $1,000 and turn it into millions. Lamborghinis are going to fall out the sky. Ferraris are going to fall out the sky. Money's just going to come tumbling in. Just trade these 5-minute charts. Just do this. Just follow the system and do that. Now, I don't say anyone's lying, and I don't say anyone is telling you anything wrong. You can learn the systems from them and use their systems to trade with. But don't believe that you're going to take your money, your hard-earned last money, put it into the market, and it's just going to win. It's not the case, right? And some of the guys out there are very genuine and that are making a lot of money, but they've been doing it for as long as I have, and they really know their way around the market. So, to just come in with your pension or your last retrenchment package or money or whatever and throw it at the market and expect, this is now just going to make loads and double up and whatnot, that's not going to happen. You're probably going to end up in the 75% of losers, which is what the market wants. They want your money. And, oddly enough, real good brokers, contract brokers and brokers that are in leverage trading and that don't want you to lose. They actually want you to win. They actually want to keep you in the game, because the longer they can keep you in the game, the more money they can make on fees and etc. and whatnot. So real brokers want to keep you in the game, so they'll help you along where they can. The funded account guys, though, I got the opposite feeling on them. I got a feeling they just want to get you out of the market and take your money. So be careful of that. You can use a funded account as a necessary evil. In other words, as a middle road to putting your hard-earned cash into the market so you can learn how to trade with real money. That's maybe not as strenuous as your last money, so to speak, because if it's your last pensionable amount of money, it could be that much more difficult to lose it. Whereas if you lose a funded account, you're kind of like, oh, I lost some money, but yeah, you kind of deal with it. There's a difference in the psychology, and it's a good middle road, a good necessary evil that's come into play. Because at first I wouldn't touch them, and now I've come to the point of realizing that they actually, they've got their place, and they can actually help people that maybe don't have access to that capital ever, where you can actually, if you do have a cash account with them and they're paying you 80-90% of the profits, great stuff. It's a good way to earn, and you've got a capital amount that you can actually work with. That's nothing wrong with that. So yeah, for those of you who do want a funded account, I did leave some links in the description, and they are available. But yeah, like I say, don't believe that you're just going to walk into the market and just take hundreds of thousands of dollars out of it. You're not, okay? You're just not. It's amazing how many people will tell you that, and how many people will tell you how easy it is to trade. And it's not. It takes a lot of years to learn how to do it and to work around it. A lot of patience. The nice thing about swing trading, though, is you can come in and you can take a trade. So you want to take a short trade on this gold. So you can look at it and you can say, I want to take a short trade on this gold right here at 41.90. And you can say, well, I'll put my stop loss up at 42.80 up here around this level. And I'll put my take profit down here at 40, and I'll just leave it and forget about it. It might take weeks to play out, but, just take the trade. And like I said earlier, have something else to keep you busy and leave the trade in place. Eventually it might play out in your favor, because it certainly normally does. The thing is, what happens to traders is you get in, the big green candle goes up here. Okay. So you get into the trade and you go, I'm buying that, and it goes up and then it comes down again. And traders don't understand that markets go up and down. They don't just go straight up. But you've looked at the picture, you've seen it bounce off support, and you know that it can go all the way up to the resistance. And you've put your stop loss down here where it's supposed to be, but you see it going down and you get out of the trade because you think, oh, well, it's turned against me. It's going the other way. When it hasn't even, not even close. Look how far up it went. And at that point, then a lot of traders decide, oh, I'm going to get out of the trade as well because I've made so much profit. But look how much further it went. So like I always tell you guys, at this point, you take your stop loss and you move it up into cost or profit, and then you follow your price up with the stop loss. And even when it gets to the top here, you don't get out of the trade. You put your stop loss right up behind it. It takes it out. You've made the money. Interesting how traders think. It just is, there's no way around it. You know, the big thing is, picture this, you can't see what's in front here. A lot of people talk about back testing. I think back testing is a load of BS. Forward testing is what's important. Forward test it. In other words, if you see a system, you think that system will work for me. That's something I'll be able to use on my charting. I like that system. That works well. You know, some trader showing it and he's saying, this is how I trade, and it looks good to you. It looks like it suits the way you trade. Then take that system. Don't change your system that you're using because that's the never-ending cycle of doom. Remember, I've told you, keep changing your system every 5 minutes. Keep trading with the system you're trading. That's fine. Pick a demo account. You get loads of them online. Just grab a demo account, okay? Whichever one. And then trade that system for a week or two on a demo account, forward testing it. Not with real money, just forward testing the system. You just want to see how the system works, that's all. And then check it out. Back testing doesn't work because you know what's happening in the future. Forward testing, you don't know what's happening next. So see if you can trade that system without knowing what's going to happen next or what's going to happen. And then, and in today's environment, do that for a couple of weeks in the background. And then you'll see, that system actually works. It can actually work for me. Then you can implement it into your real trading. Don't run some program that backtests it and says, well, it's got this possibility and that. You're trading against real human beings in the market. You're trading in a real market where real people work and real people live and real presidents tweet. And the environment changes on a regular basis. And you have to, like a chameleon, change with the environment. You have to move on in that environment. You can't get stuck in the old environment. If you're constantly backtesting, you're really testing an old environment when you need to be testing a new environment and seeing if it works in that new environment for you and if that system is going to appeal to the way you trade without knowing what's going to happen next. You see, if we take this trade here, we don't know what's happening next. We know what's happened in the past, but we don't know what's happening in the future. So we assume that it's going to go down. So we take the short trade, we manage our risk, and we see what happens based on a system that we use, which I surely don't change at all anymore because it doesn't matter to me. The system doesn't matter to me, only the strategy. But I'm ranting on about that. Okay. So it's it's just straightforward stuff, you know, but I don't want to I'm just not that. I can't sit here and just boast about trades and showing Porsches and Lamborghinis and I made $1 million here and that. It's just not me. I just need to show you guys the reality of it. It's a real thing. It's not fancy schmancy stuff. It just is what it is. You trade, you invest, and you're trying to make a profit. There's always a possibility to make a profit. There's always a possibility to make a loss. I mean, it's the same as me coming in here and telling you guys that you're going to make a fortune playing poker. Like what he said, should I just go on the poker tour? You know, I can't tell you that. I can tell you how to play, and I can tell you how to put the cards down and how to do it. But I can't take your psychology, put it in the game. That's the thing. And the same with trading. I can't take your psychology and put it in the game. I can show you how to play. I can show you how to work. I can show you what it can and cannot do for you. But I can't take your mind and place it here and work with it. Every single trader that trades gets a different result, even if they follow exactly the same process. You can follow my research, my process, whatever, on a regular basis. Doesn't mean you'll achieve the same results. We'll achieve different results based on the way you feel, the way you trade, the trades you take, the way you feel about the market, when in and out, and all that sort of thing, and how much. That's something you need to know as well. You know, you can't just copy trade. You can, you know, like my trade of the day to you guys, or particularly the members that go and they watch the trade of the day and a few other things, is very much this is what I'm doing. Does it align with what you're doing? And maybe it'll show you a few trades that you might want to look at and say, oh, this looks good, you know, whatever the case. But it's not a copy trade. It's oh, that's interesting. Perhaps that's the right way to look, and maybe I should look at that trade, and, you know, that sort of thing. That's more what it's about. I see a lot of guys sitting just taking trades and look here and take this and take that trade. And yeah, you know, I suppose we could do that, but there's no point to it. There's really no point to it. Looks great, looks fun. Those guys get lots of views on their videos, obviously. Lots of people sitting there watching that, because that's interesting, isn't it? Watching trades click in and out. So this US dollar ZAR, oof, what a trade. I got to take it again. Got to take this trade again. I just can't resist. It's going to be one of those trades. I'm going to have to take it long again soon. You know, the trouble with this trade is I'm looking at the picture here, and I don't know if you guys can see it, but one thing I can clearly see is a giant head and shoulders. Okay, it's bouncing out at me. But fundamentally, I want to take this trade long, and I was waiting for it to break through this trend resistance to go up, and it hasn't done it yet. So I'm patiently waiting for that to happen. I'm not going to take it now. Waiting for that to happen. But by the same token, I am seeing this giant head and shoulders, and it is concerning. Fundamentally, this should not go short because it's the South African rand. I mean, the only way that this could go short is if we had an insane government change right now, and they were like the most amazing people, and they just were going to turn the country around in the right direction. Then I could see that. Or if the US dollar, for some other unphenomenal reason, would collapse completely, like in disastrously, then I could see that. But under normal circumstances, it's not making a lot of sense at all. So I'm just looking at the fundamentals of it and thinking this should really be going up the other way. The rand should be weakening. But we'll see. We'll see what happens with it and see how it goes. But that's how you take your trades. And what I'm doing here is I'm being patient, though. I'm waiting for this to break through the trend resistance and go to the upside. Once it breaks through that trend resistance, goes to the upside, we'll definitely make the buy. That's how we trade. That's how we look at the trades. For those of you who came in late and didn't see how to choose your winning trades, you've got to go back to the beginning of the video. You're probably going to have to watch the first 10 minutes. I don't know how long it took. I didn't check. You're probably going to have to watch the first 10, 15 minutes of the video. And then that's where I show you how we pick the winning trades, or how we pick trades, or how we look for trades, and the best way to take your trades. How we pick the trades is easy. We just look at the watch list, we go through the watch list, and we look for which ones look good. But how you take the trades is, look, we trade the three ways, as I always tell you guys. Trade with a trend, trade in the range, and we counter trade. That's a price. Just take the trade. That's the important thing. Just take the trade when you see it, when it comes to you. You know, all the best laid plans of mice and men. This is a good example of what I'm showing you now, though. Earlier on today, I went short on the US dollar Japanese yen, and it's now going long. So what a lot of traders will do is they'll say, oh, this is going against me, let me get out of the trade. No, this is how it works. It goes down, it goes up, it goes down, it goes up, it goes down. But in general, it's going down. So in general, we're short because in general, it's going down and it's broken to the downside. So in general, it's going to keep on going down eventually. And you'll notice that when you take trades, very often they kind of go against you a little bit. You just have to accept that that's going to happen. The trades are sometimes just going to go against you a little bit. Just accept that, okay? So that trade was taken because it was, we waited for the trade, we waited, the trade came, take the trade, and then it goes against you, and you think, oh, I waited so long for that trade, it goes again. No, just let it relax, it'll eventually, it'll either play out, or it'll hit your stop loss. And there you go. Now, this morning we were talking about crypto. This is the Ethereum. And we were talking about crypto, and I said I didn't want to take the long trade, and I was ignoring the trade because it's all hit resistance. And when it hits resistance, you have to say, let's wait and see. Okay. And what I was waiting for here is either the green candle to the upside or the red candles to the downside. We've got the red candles to the downside. It looks like, say this carefully, it looks like that it wants to stay in its range, which is here, between this 32 and 2650 level somewhere. Up and down here, staying in that range, and it looks like it's falling over, and it's going to come to the downside. So you just look at your levels, and just use these levels. What is a resistance? A resistance is an area of liquidity. In other words, what's an area of liquidity? It's where all the money and orders are. Why do I know they're there? Because every single time the price gets there, it gets rejected, which means something's rejecting it because it's a real thing that's rejecting it. It's not a line, it's not math, it's not an algorithm, it's not some brick wall. There's human beings there that are saying, it's reached that price again, it's time for me to sell. Okay, that's what it is. It's a bunch of human beings saying that. And you got to think for yourself that since you're not an institutional trader and you don't make up 95% of the market, that it's probably not you. It's probably them that's saying that, the guys with all the dosh. So if the guys with all the dosh are saying that, then clearly that's an area of interest. And if that's going to push it down, then I want to be part of it and try and take that money with them. Now, this can be constituted as resistance areas, support areas, trend support, trend resistance areas, or it could even be supply and demand areas, areas where there's order blocks as such. Okay, why do I say that? Well, if you take an area like this where there's a big red candle and a bunch of green candles going up, normally 3 big ones, but if there's like 20 like this, okay, 10, then that's a sure sign that the money was pushed up. The money being pushed up means that when it comes back down, it's going to be waiting for it down here. So what you do then is you take your little rectangular block and you can draw it in there. You can say for yourself, when the money gets back down to this little level here, it might actually take this money and bounce back up because it sure pushed it up from there. So there's probably a good opportunity here to buy. That's all you got to look at. You just look for those liquidity areas. What you're looking for, your sole job in the market, your sole job on these charts is to look for the money, to search out the liquidity. Because there's going to be liquidity somewhere, somehow in here, where somebody's pushed the market down. Up here, there was a whole bunch of liquidity. It took it, it came down. Now it's looking to go back up again. These trends give you a lot of information. These resistances give you a lot of information. Use that information. Look at the bigger picture, not the small picture, the big picture. Play with the big picture. US dollar, Canadian dollar, we called it long. Why did we call it long? Because there's a support level here. Every time it hits that support level, it bounces up, which means this is an area of liquidity. There's money there, loads of money. So, and there's a pincer bottom as well, even better, 2 candles together. There she goes, up, down, up. This is almost a retest. So break and, well, not a break and retest, but it's a bounce and retest, let's say. It's come back, tested that area again. But there's loads of money here. Every time it comes here, it just bounces up. Now it's not only bounced up, it's also broken the structure to the upside. This US dollar, Canadian dollar is a really good buy. If you want to buy anything, buy the US dollar, Canadian dollar. It does look like a good buy, doesn't it? Is that closed? No, it hasn't closed. But when it does close, it does look like a good buy. Let me just check my orders. US dollar, Canadian dollar. A US dollar, Canadian dollar could be a really good buy. Yeah. Wonder if I can buy it here. Let me just see. Buy. Stop loss. Stop loss on a buy. 1.3888. 1.38. Yeah, 1.38 is too low. Say 1.39. Maybe. Yeah, I'll put it at 1.39. That'll be fine. That'll be a good stop loss. Not too bad. Let's just see how that works. Yeah. Okay, and then a take profit. Where do we want the take profit on a buy here? 1.41. 1.41. Let me put that in. 1.41. Sorry, guys, got to do this. Profit looks good. Buy. There she goes. Okay, that one's in. Close that. Okay. We own the United States Canadian dollar long. Right, okay. BTC short. I was looking at Ethereum just now. BTC short. You know, my opinion on it, what is it? You could take it. You can take the short because it's in a range, but just keep in mind, just manage your risk because it is volatile. There's been this sort of recovery, the shoot up. It's hit this resistance level. There's a double top here, and it does look like it wants to go short. The red candle has developed, and it looks like it wants to go down. I'm much more comfortable with my US dollar, Canadian dollar trade now, but this could go short. I do like it as a short. It does look like a decent short. My concern is how short can it go? Because it is Bitcoin and people have been calling it up for a long time. Now, I know in recent times, people have been calling Bitcoin short and saying, no, it's going to go down to 70,000 and it's going to be useless and it's going to be gone and all the rest of it. But I don't know, guys. I really don't know. I think it's still going to keep on going. I don't think Bitcoin's finished. I don't think it's over. I think at the moment it's just playing around in this range. So you might get a short-term short down in this range, back down to the, what's that, 81,000, best case scenario, maybe 83,000. But I would actually wait patiently for a good long trade, maybe back off these lower levels again, or a breakout to the upside. You know, I think the short trade is there. It is there, and you can put your risk close by 97,000 stop loss with a take profit at 81, maybe 83. But I'm not a big fan of shorting it right now because my feeling is, here's the thing with Bitcoin, okay? There's a lot of noise around it, but it has been up at 125,000, which is quite a long way from 90,000, which is where it is now. It's at 92,000, 93,000. So 125,000, it's been there recently, and it's fallen back down again. There was calls for it to go to 70,000. Then I went long on it, and it did okay. and it came back and took the stop loss out, and it carried on short. Now it's long again, and I'm actually looking for the long trade on this, because I don't think, unless the fresh air bubble bursts, which it can on Bitcoin, because as you guys know, I don't believe Bitcoin's got any asset value, and I think it's a big bubble. I think it's, going to burst eventually. But is today the day? I don't know. So what I'm looking at is, if the bubble's not going to burst, then all the people that own Bitcoin, because it's seller against buyer in Bitcoin, there's no asset value. They're all going to try and hold it up. They're all going to want it to stay up. Even the exchange traded funds are going to want it to stay up. The worst case scenario is it's probably going to get down to the 70s, but I don't see it going much lower than that, which means if you're at 90 and 80, you're probably at the lower side of the trade. So what I'm looking at overall is, I'd rather look for a buy at these levels. So it's short now. It could come all the way back down to 84, 83, 81. But I think what I'm going to do is look for the buy at this level, or look for the buy at the breakout on this level. And that will be a better trade, just based on the overall picture. This just comes with years and years and years of looking at things. You look at things and you think, no, but why would you do that? Why wouldn't you just take the short now? Well, you could, but it's very short-sighted trade. I'm looking at the more long-sighted trade. I'm looking at the overall picture, the bigger picture, and I'm thinking, while it's bearish now, it is going down and everybody's against it. I'm thinking overall, somewhere down the line, they're going to try and push this thing up to 200,000, and that's what's going to come of it eventually. That's what I'm looking at. But yeah, you could take the short right now. The short would take you down to the 80s most likely, and unless something goes insanely wrong and it goes the other way and it gives you the breakout. What I am being careful with on Bitcoin now is something that I've noticed, and I wasn't a Bitcoin trader or a crypto trader in any way before. So Bitcoin is pretty new to me when I compare it to my 34 years of trading. Bitcoin, crypto, maybe a year of being interested in it. So I'm not really big on crypto. But what I have noticed about crypto is it has been tending to follow these indexes, which is interesting. I don't know why. I don't know how that works, but they have been tending to follow these indexes, and I think that has got some bearing somewhere down the line. So keep an eye on the indexes. It might give you a bit more of an indication of why or what's happening with crypto. It might be reacting to the same sort of fundamentals and the same sort of news at the moment. And it's a temporary thing, but it might just be reacting to the same sort of news as we stand at the moment. It's interesting how that happens or how it works, but yeah, these are the things that happen, and these are the things that go down and what have you. Okay. So with that, on that note, I'm actually going to be on my way. I'm going to head out a little bit earlier today, but I hope that the information I gave you about choosing your winning trades will help you in some way or another and will work for you. If you guys have any suggestions whatsoever on what kind of videos you would like to see in the future, feel free to let me know. You can let me know in the comments, on the posts. You can let me know on an email. I don't mind, and I'll look at it, and I'll look at the overall picture if it's something that I should put out there. So if there are things that you feel that you're not getting, that you would like, information that you would like to know more about on the markets, that is, obviously. If there's something you would like to learn, something you would like to understand, or if you feel you'd like to see more videos based on that sort of scenario, let me know, and I'll have a look at it for you and see if it's viable and if it's something worth doing. Because at the end of the day, this is for you. It's not for me. It's more for you. It's for you to figure out how to trade. It's for you to figure out the best way to trade in the markets. It's for you to figure out whether you should buy or sell Bitcoin. I can't do it for you, but I can show you how to do it. And, I just pick random things and say, today I'm going to talk to you about the exact rules and how to choose your trades, What's the best way to pick your trades? That comes from my head, and really at the end of the day, it's up, you guys does it work for you guys? Maybe you guys want to hear something else. So like I say, if there's anything that you guys want to know, feel free, let me know. It'll be interesting, okay? And I want to thank you guys for joining me on the live stream. It's been fun. It keeps me company as much as it keeps you company, even though I do all the talking. Yeah, I do all the talking. It would be nice if you guys could, I must figure that out, if there's a way that you guys can like get on the show and talk back, and we can have a bit of an interesting show. That was something I would look at as well. But yeah, on that note, guys, I want to thank you guys for being here. I want to thank you for watching. I hope it's helped you in some way or another and been useful to you. I'm glad if it helps you and it goes in the right direction. And I'm not just talking into the moon and fresh air, obviously, that I'm actually helping someone with this. Guys, till next time. The next show is on Tuesday. Don't forget to come back for that. Don't forget to come back and watch tomorrow's video. Watch the other videos as well. They're useful to you, and they might be able to help you in one way or another. Cheers.